Good evening, everyone, and welcome to our webinar on mining in Africa. So first of all, I hope you're all doing fine during these trying times of COVID-19. And well, we're all looking forward to have a bit more liberty and more freedom in the coming weeks/months. So I am Julia de Couvreur, co-president of the Africa Business Club Brussels. And actually, for those of you who are not familiar with the organization, I would like to say a few words about it. So who are we? We are actually a networking platform focused on business in Africa. And we actually have three main goals that we want to fulfill through this platform. The first one is to bring people together. So actually like-minded people who enjoy talking about Africa. We want to foster actually meaningful conversations about business in Africa. That's the point. It's not just about having enjoyable conversations and meeting nice people. We want to talk about business in Africa specifically, and then through that we want to actually influence the African narrative. So through these meaningful conversations. Now, over the past 6 years, we've been able to achieve a few things, such as conferences on several business topics, workshops on a smaller scale, let's say. We've hosted hundreds of happy guests, now moving online, obviously. And we have more than 1,500 followers on social media currently. So you're probably wondering who is behind the Africa Business Club Brussels, and it's actually just a few of us who mainly graduated from Solvay. So we are alumni, not all of us, and we're quite open, but it's a fact that Solvay is very well represented in our team. And actually, speaking of Africa Business Clubs, we're not the only one. Obviously, we are part of a big network of different Africa Business Clubs from economic schools all over the world, actually. So not only in Europe, you see like the MIT one, the famous Harvard Business School Club is also there. So it's actually it's much bigger than us. And if I speak only for us, we've been fortunate actually to work with several partners over the years, such as the South African Embassy, 3E, the Belgian Chinese Chamber of Commerce, and McKinsey, which is actually one of our biggest sponsors. And to actually let you know about a special initiative that we're carrying out with them at the moment, I will now give control to Arsène, my co-president.
Thank you, Julia, for this clear presentation of the club. So my name is Arsène Lokola, and as the co-president of the Africa Business Club, I would like to thank all the participants to this webinar and this very interesting topic. And as Julia stated it, we strive to promote the best aspect of the African continent through business. And in this context, we are collaborating with McKinsey and Company in the organization of a series of workshops which is aiming to improve the professional skills of the members in our network. So because we believe this is totally in line with our global vision of building a network of skilled professionals who are passionate and interested in changing the narrative around our beloved continent, and who are also interested in the socio-economic development of the African continent. So if you are interested to know more about those initiatives with McKinsey and Company, I would like you to follow us on our social medias, and in order for you to get informed and participate to the coming sessions. And just to come back to today's topic, I would like first of all to apologize to all of you, because one of our speakers will unfortunately will not be present, namely Yves Kabongo, for professional reasons. But however, for those who are interested, we can share the presentation material that he prepared for this webinar. And also I would like to take the time to also thank the two other speakers present today. So both of them are named Serge, so Serge Nawej and Serge Bilambo, for the time they are taking to share with us their knowledge. I'm pretty sure that you'll learn quite a lot because they are really involved in the topic. And also I would like to give you a heads up on how we are going to function with the slides, with the questions that I'm pretty sure that we have quite a lot. So we will use the application WooClap, so you can scan the QR code that you see on the screen. We'll also send you in the chat a small PDF explaining how a small PDF explaining how the tool works. So you can scan the QR code that you see right now on your screen. So you'll be able to ask all your questions and vote for the most pertinent, relevant question also, so that everybody can get a sense of what everybody wants to hear about. And those questions will be answered at the end of the presentation. And I would like also now to introduce our, so as this is basically a slide explaining how the tool works. So you'll get a small green icon on which you have to click, type in your question and just send it. It's very easy to use. And now I would like to introduce our host of today, Mr. Yves Brossens. So Yves Brossens have been part of huge, big international law firms such as Linklaters or DL Piper. He's also the founder and partner of PKM Africa, a law firm focusing mainly on the African continent, and he works now in close collaboration with a lot of lawyers throughout sub-Saharan Africa. He's also the legal and strategic advisor to Sud-South, to the company Sud-South, which is a DRC company committed to make the DRC benefit from the green energy revolution. He serves, a lot of type of clients, from the largest multinational to the most motivated person with a great idea which can change our beloved continent. And besides that, Yves is not only our moderator, he's been since day one at the beginning of this journey with the ABC. So for that, I would like to take the time also to thank you, Yves, and I'll leave the stage to you so you can introduce today's session. Thank you very much.
Yeah, thank you very much, Arsene, for the introduction. Good evening to everyone, and thank you for attending this online conference after a busy day, and maybe for some people, the day is only halfway, so good luck. So as Julia also said, notwithstanding COVID, the Earth keeps turning around and we have to follow. And talking about Earth, climate change is very high on the agenda. Everyone recognizes that we can simply not continue down the same route as we're going now. And we have to take a turn, we have to change, we have to move towards green energy. And one important aspect in the whole approach is this of electrical vehicles, or EVs. Some of us already drive one, but the vast majority is still looking, will it be electric, will it be hydrogen, will it be something else, will it be both? Are they already reliable? Will the battery technology still change significantly? Will the range be around 300 to 500 kilometers? Will that be the norm? Who do we have to call in case of a problem? Our garage, and get the answer, Have you tried to switch it off and to switch it on again? Like we sometimes hear from IT help desk, with all respect for IT people. But Africa is very involved. Africa is extremely rich in minerals, and it has been feeding the hungry world with minerals over decades. Unfortunately, with raw ore being exported, the treatment, refining, and the use in the manufacturing happens mostly on other continents. In batteries, that we will see now indeed an important increase, in laptops, in mobile telephones, and so on. But African countries must become more than just suppliers of raw materials. They must become manufacturers and claim a share of what is a multi-billion-dollar industry. And as Hadley Natus of the board of Tantalix Resources said recently, Africa needs to become the go-to continent rather than the take-from continent. Africa missed already quite some opportunities due to short-term thinking, and the world's growing desire for green energy can change this. Africa has to take the full advantage of the value chain of its resources and really create a new model. Lithium is quite abundant in many continents, but for cobalt, which is also one of the essential ingredients, I call it ingredients for batteries, 70% is found in the DRC and most specifically in the Katanga region. Part of it is mined industrially and also part is mined by artisan miners. So the opportunities are huge for both players. The predictions are that the prices will increase very substantially because of the steep increase in demand. And so the big question is, will Africa be able to capture that opportunity and move towards industrialization? Of course, we have to take into account that the market players are very powerful. The large commodity traders or multi-billion-dollar companies, they have a certain hand in the export of raw materials. Will China play a game to try to keep the cost of minerals low because they do most of the refining? Will the USA and Europe we will now really start to realize that they're maybe missing out on some strategic minerals? Will they be an ally for Africa? Or will their industries also wish just to keep the cost of batteries as low as possible? I think there are a lot of questions, and I thank the Africa Business Club of Brussels for the opportunity to discuss that this evening. And I'm very looking forward to listen to Serge Bilambo and Serge Nawej on how they see the opportunities for Africa and batteries. So Serge Nawej, I give the floor to you.
Thank you very much, Yves. It is very interesting because I think I have nothing to say anymore, because most of the points that I was about to address have been addressed by Yves. Like always, there's always a connection. I think it's quite interesting. However, I'll take the time again to thank you for the time and the invitation for me to participate to this session. And I would like to, and I hope that we'll be able actually to address some of the questions and the issues that many of you have been seeing, experiencing while discussing about Africa. But my first point, and the point of my Arsene, I'll see if I'm controlling the slides. What I will do is that I'll probably not, I'll follow my slides, but I might not follow the order because there's so many topics that we'll be discussing. And if anyone wants a slide, I think, so we will avoid all the technical issues. But I'll start, however, with my introduction. And my introduction is always about where we're living now. And what is typically happening now in Africa is that Africa is part of the world. And the world is now experiencing a great pandemic. You all know, if we did not have this pandemic, we will be sitting probably together in a room at Solvay or somewhere else in Brussels. But what I have to say that is Africa, like Africa will also show in this great shift that we will be experiencing, is that resilient throughout all the years, including when it comes to this situation of the pandemic. We've heard a lot of things about how Africa will collapse, about how we will get there. We will have a number of people dying, but this never happened. What I want to say here is that actually we are entering into a different world. And this is where Africa has to understand, and we all have to understand that it's a different world. a world where this pandemic is coming with also a financial crisis. And that financial crisis has been very acute, and nobody's talking about the financial crisis. We've been living for years and years on an economy which are based on minerals, mineral resources. The first mineral resources that has been very, I would say, widely accepted and used, and then even coupled to the dollar, and mainly the dollar. I even forgot gold. I'll come to that. It's oil and gas. And the oil and gas industry has a crisis. They will tell you that I remember during the first presentation that we had with on the same forum actually in Brussels, where I was talking about the peak oil. And actually, I must addict myself, because the peak oil will never happen because of one reason. There's still much more discovery when it comes to oil and gas, and even some fields which are not very complicated to exploit. So, but we've decided, probably because we know that in terms of financing, we've been creating so much, and I think this is also a point that that I'm dropping actually probably something to Serge Bilambo. There's a lot of toxic product that has been created throughout the financing, etc., in the process of financing and creating certain securities, obligations, etc., and then financial products which are definitely toxic, which have led to the situation where we needed to change the paradigm. Basically, we are, and this is only my opinion, we are changing completely the paradigm with the introduction of very new situation, new currency, digital, deep change in our way of living, and of course, environmental issues which are addressed by what I call the all electric. So the current context is actually about resetting the system. And how are we trying to reset the system is to change and to come into everything which is all electric cars, green energy, of course, to be able to have electricity. I mean, yes, in order to have cars which can be charged, batteries we can work with, definitely they have to have electricity. So what is the consequence? The consequence is that there's a number, it's that a number of base metals such as copper, cobalt, the treaties, which mean tin, tantalum, and tungsten, lithium for the batteries, because we only name lithium, cobalt. All these minerals are becoming highly critical. What is really important to understand is that, and I'll take the example of Congo. We've had a lot of speculation in the mining industry. I always try to give this example. If there's only one mine in the DRC in Congo, in Katanga, which reaches the highest level of production, and then can produce to the highest capacity of its plant, basically what will happen is that we will have no electricity on all Katanga because we can't supply those mines. So what has been happening throughout the different years is that we have been trying just to address the demand, the lowest, and then also to do financialization of most of the mining assets. And that has been a big problem, and then that will reveal to be a big problem now that actually we are entering into what I call a real demand for mining products, where actually we're not just supplying China to manufacture phones, computers, cables, etc., and then to resell it to Europe, but we're entering into a different change. And then this different change actually will create a need, and then we're entering into what is happening into mining, to develop greenfield assets, which have been neglected, because most of the transactions on the mining assets were mainly on what we call operating assets or brownfield assets, where there's already studies and where they reach a level of studies such as, and most generally the investors are looking at the JORC certification, which means that all the study, the exploration and the first phase of mining transaction have been made. That has been very problematic now because we will definitely have a shortage into supplying the main strategic minerals. And those usually, I'll say the one that I call the no-brainer minerals are copper and cobalt, because again, you need around 300 kilos of copper for each cars, and And cobalt, I think you need something like 30 kilos or 25 to 30 kilos of cobalt, processed cobalt for cars, for batteries, etc. So in such a manner that no matter what happens, these minerals will become, I'll say, the next gold, what I call gold. And in terms of investment, because we've been making a lot of investment, we choose to look at copper, cobalt, and lithium, which are key. And of course, we're not wrong in our approach, because I'm a chairman of a mining company named Bravois. We were definitely long, because we had anticipated the market adjustment, and you can see that the copper and cobalt price is rising. Of course, it's simple. Demand, the fact that actually there's no very few assets which are producing, the fact that actually the financialization has reached probably the limit of where it is and should be for these assets, and the need now actually to have infrastructure built to ensure that that we will have that. We'll have a proper production addressing the needs. There's a report, and I think I'll go a little bit further on if you look at, I think the next slides, and I don't know if you see a number of slides where actually you can see the different minerals that I just mentioned, which are some are strategic, and you will see that there's a report from the World Bank which is showing that there will be actually the increase for several minerals of more than 300% by 2030. And this is really critical when it comes to investing into this industry. I've also shared another slide, and it's unfortunate that we can't continue and move on the screen, at least the one that I actually shared, because there's a few slides which is showing actually the need in terms of copper in 2020, 2025 and 2030 in terms, and then you can see the increase of these are the minerals. Then the next slide. If we go to the next slide, you will see that actually there will be a number of increase in terms of the need for, depending on the grid storage, the charging infrastructure, and also the non-ICE vehicles. So it's a no-brainer. So we can already go to the next slide. It's definitely a no-brainer for Africa. But then this is where actually I'm joining. Actually, I will only concur with Yves. I'm not yet at a conclusion, but I think this is a sign to tell me that actually maybe I'm talking too much. So I'll come to the conclusions very quickly. But there's also another issue that about Africa. Is this situation really changing something for Africa? I do believe that Africa has the power to change things. But in order to get there, if we look at what has been happening, you've just mentioned about the Chinese, but it's not only the Chinese, the Belgians, the French, and anyone. And I think that there's it's a no-brainer, no mystery. There's no mystery in the fact that President Macron landed today in Rwanda and has been organizing this huge conference with a limited number of African presidents who have attended that. This is showing that actually there is definitely a different paradigm coming, and then all African presidents now are starting to understand, or probably are better advised in order to change their own vision. But the world in which we're entering, it's not only going to be about countries, but it's going to be about investment and clusters. What has typically happened now is that the major into construction of cars, let me talk first, I'll come back to the major construction of cars. First, the countries, many of the countries in the US, like the US government, have decided to change I think by 2025, all the government federal cars will only be electric. The Finland, Norway, I think actually they've also taken similar decision in such a manner that they will need a deep supply of copper, cobalt mainly, a lot of cobalt for the batteries. I have another example today because I just landed in Lisbon this morning, and while taking a car, there's ships and some electronic spots, because during this period of time of COVID, they've sold so many computers, and then some of the parts now cannot be supplied for cars. So we will be entering into the different times, decisions have been taken by many governments to enter into this electric times, but actually I think it's going to benefit to people who have been smart enough to invest in mining, which when I mean mining is real activity and no longer speculation or financialization, which are boosting the stock exchange. So Africa, how Africa can benefit of that? It's definitely in entering into different partnership with the, I'll say mainly the juniors, but also the majors. But the majors I have just mentioned before, the big traders, they are reluctant to work with people because they have been, I'll say they milked the cow for many years, and now actually we're entering a different structure. And why? It's because we have people like many of your members starting to advise our leaders in Africa and telling them that there's different way to do business, and the way to do business, for instance, will be bringing different approach. For instance, as a lawyer, as you know, I'm a lawyer, I'm a businessman lawyer or whatever. As a lawyer, what we brought in Congo is the production sharing model. Congo has been working, and the government usually has royalties into mining assets. They have shares, and then there's mandatory, I'll say that share structure, which imposes, it used to be 5, now 10% from the government, and each time that there's a renewal of an operating assets, government get 5% until the number of renewal, you can get to 100% after 100 years or more. But now the government has shares in those used to have and still have shares in those structuring, but they're not participating to all the value chain and beneficiation of all the minerals in such a manner that they only have shares of operating assets which are deeply in debts, because the way that it is financed, they're using the asset, the local asset, and the local company actually to bring security and also to be the main borrower in such a manner that the operating company in the DRC will never make profit. And that has been a system which has been existing for years and years and years with intercompany loans, etc., but which is changing. So while we were entering into a different project in Congo, we said to the government, we don't want to enter into that. We're Africans, we're making investment and important investments. So what we want to do now is to bring you something which is different. It's production sharing. So basically we will be using, and then we'll be making all this investment, and then we will look at the CapEx and OpEx, and then we'll determine what is the value of the CapEx and OpEx based on the minerals that we are exploiting. And what we will do, we will share either 50-50, 60-60, that's not important. So we'll just agree on a project. So you will get your fair share, an equitable share of minerals. We will get our own. We will have a structuring where we'll control the company which owns the asset. But in fact, you will get, after deduction of the CapEx and OpEx, you will get your own share of minerals which you can sell in such a manner that you will make money. Actually, and this project has led Drc Mines to change their own approach and then to introduce now the production sharing into mining. So what I'm trying to say here is that now Africa needs to adapt to where they are going, where the world is going, and to ensure that actually it gets its fair share. We cannot do anything by ourselves. Not just come in and try to break some monopoly or some system which was existing before. But the great shift which we are living now, it's really interesting because it has created a lot of vulnerability on those markets which have been more exposed than Africa to the financial system. And they are more in distress and in need to find new assets to ensure that actually they can keep the stock exchange structure, the finance structure the way it is, and to avoid it to collapse because we were definitely going into a collapse considering this financial crisis. So electricity, batteries, and I'm a little bit of a polemist on that, but it's also a way to save our system. And Africa now, it's also the time for Africa to play its own role. And so for me, the point of discussions, and that's where we're going, will be this point. And then it's definitely to know that what should African countries with the largest reserves, yeah, but definitely the point of we were already there, so we can go to the first point which I would love everyone actually also to ask question if there's any, but somehow. But I'll just summarize them so we can start the discussion, and at least I can leave the floor to Serge Bilambo. The new paradigm is just what we just mentioned. So it's a description that I just made, and we need to optimize the mining activity, and especially by developing the greenfield assets, bringing them to a level. And I do think that in 2 or 3 years, this can be addressed, but the demand is so high that we will definitely have very important rise in the price of commodities such as copper and cobalt. We definitely need also to accelerate the brownfield assets and to optimize by bringing electricity, because I just mentioned that that's a huge issue. We can talk about any reserve, any mining activity, but if we don't have infrastructure, proper electricity infrastructure, but also railways, etc., this will be problematic, not only for Africa, but for the world, because Africa needs infrastructure if we want to address this demand, and if we want to ensure that actually we're meeting the strategic positioning of our world today. So we can go into the other slide. What role Africa, countries with the largest reserve of strategic minerals, play? Actually, they play a strategic role because most of the minerals have been coming from there, even if they were not processed in Africa. Name them: oil and gas. France know better than anyone. Copper, cobalt, we know it as Congolese with the biggest reserves. So Africa is a strategic location. Decides to do, and then basically the main point here would be DRC, because we're addressing, I would say, 70% of the needs of the world, and then even more, and it will be central to this, what I call the great shift. Basically, and then in the DRC now, there are few provisions which are, for me, quite positive in terms of local content, where we see some regulation imposing, for instance, for what they call subcontracting. Technically, as a lawyer, I would not call it subcontracting, but at least I would just resume it this way: supply of services and product, except for banks, insurances, and some other exceptions, are subject to a share structure of 51% for Congolese, and any agreement which is contrary to that actually may be considered as null and void. Unfortunately, it's not yet applied for many reasons, because many Congolese have not understood what they had. It's another mine. Sometimes reading, you can find other different minerals. I'll call it literature. It's la literature. So we need to go into a sort of intellectual minerals, which will help you find the right structuring, and then to get some strategic positioning with suppliers, explaining to them, teaching them how things are working, that there are different things that have been changing, that there's a regulator which is looking now at local content provisions, that the government has been serious, that despite the pressure that some of the Western government are putting on the DRC government to change those regulations, that Congolese are supportive of these regulations, because it will bring some, I won't say just billionaires, but it will create some Congolese with minimum resources to be able to invest in their own countries, and then to be considered as, I would say, reliable people towards the financial system, which is only looking at Western, and it's very difficult for African people to raise money and funding if they have not been linked to any international company. So, so this other point, I think I will be landing soon. So the overview, there's an overview and explanation of the mining project. That was also a point which was submitted to me. And I didn't want to enter into details, but we can definitely enter into details. I will be happy to do that, but it's always simple. Mining activity has several stages and steps, and usually, and then I already mentioned that throughout all the explanation that I give with the different type of assets from greenfield to operating assets. But the phases, the main phases, and if I have to limit them to two, it's going to be exploration and operations. And during the exploration, there's a lot of issues because mining requires really deep pockets. For instance, now we're assisting a transaction, a 5 billion transaction. And this transaction, actually for the only exploration, the sponsor, which is a local sponsor, spent over $50 million, which have been audited by Deloitte, and only for exploration, and use the best companies in the world to be able to have his JORC certificate, etc., successfully. And this probably will be a groundbreaking transaction that will be, I can't talk much about it until it's published, but definitely we see things coming. And but it required someone who already had activities and who had decided to put a number of resources in the exploration. So funding explorations is really difficult because banks, even funds or any other institution which is specialized into mining, including those who are looking at infrastructure such as the World Bank, also the IMF, World Bank, African Development Bank. They have a policy where they never, at that time, even Proparco, in their policy, they were not looking at extractive activities. So it has been very difficult to find financing and funding for the exploration. Operation, of course, if you get to operation.
Not to interrupt you too much, but we almost have to round a bit to leave some time for Serge Bilambo.
I'm lending.
Just being responsible of the time.
I'm lending. So how much time do I still have now, actually?
Oh, let's say 2 minutes.
2 minutes. It's. I think it's enough actually to address those challenges. But overall, financing and the way of financing is not very complex, and especially when you bring the production sharing, the trade financing, and system, you can definitely find a way to fund your project, especially if you already reach, I'll say, the last stage of exploration. So challenges encountered in this type of financing, I think we already addressed that through what I just mentioned. And the potential solution, of course, is, again, we mentioned that, local content, production sharing, and then also artisanal production. Yves, I think I'll just take 2 minutes because I'll take the time of Yves Kabongo, because it's quite interesting because, for instance, for copper, 80% of the production was artisanal. So we participate in creating and the first reflection of an institution named now EGC in the Congo. And this is a one-stop counter for all our artisanal products, where actually they can buy to them, sell, etc. So we've been discussing, and then I think the government now is listening, and the decision makers, in putting together new structures and new companies, which actually are attracting even funding for the artisanal miners. And then it has copper and cobalt, especially copper. Cobalt has been considered as a strategic mineral in the DRC. So if it's artisanal mine, it has to be going through this EGC, etc. So basically, the key for Africa will be to create green partnership. And last information, because we're entering into this green energy system, Robert Friedland, who has now the largest project in the DRC with Kamoa Kakula, has decided to come into to achieve actually net zero operational greenhouse gas emission, and everything will be green in the mining. So we will probably have with them one of the most modern and environmental friendly mining activities in the DRC. Yeah. So basically, I think I'll stop here, and thank you for that.
Yeah, thank you very much, Serge. I think it was very interesting to hear all your different views, and it's not an evident matter. It's quite complex. The production sharing, the models, the financing, and of course the involvement of the international community. I see already that various interesting questions are coming in, but I suggest that we keep these for the end, so to follow the program. And that we now give the floor to Serge Bilambo, somebody who has been really had top positions in banks and is now, I think, at the head of mining and metals at Standard Bank Group and based in Lubumbashi. So please, Serge Bilambo.
Hi, can you all hear me?
Yes, yeah.
Okay, hi. Thank you, Yves. I think it's my first participation as a speaker to this forum, and I'm glad to be here, and I will try to share my views on what I see as the way forward for the mining sector in the DRC. Of course, my views are quite influenced by my activities as a banker and looking at the mining sector and the mining portfolio for Standard Bank in the DRC. Just to add to what Yves said, and for those who don't know me, I'm also the head of client coverage. So looking at the whole business development area for Standard Bank in the DRC and managing all the clients and the relationship. I hope Arsene will help me. So we can go to the next slide, Arsene. So if you don't mind. So there's a lot of literature in my presentation. I will try as much as possible to address some of the issues. Serge, Nawej already touched based on some of the points I wanted to discuss. But it's always good to share different views on some of the points. So I will start with a brief, let's say, a recent evolution of the mining sector in the DRC, as I felt that this is quite important, and also not sure if we're talking also to those that don't really know the mining sector in the DRC and its evolution. So as we all know now, DRC is known and considered as one of the wealthiest country in the world, and which has an estimated of $24 trillion of untapped minerals deposits. And this includes cobalt, copper, industrial and gem diamonds, niobium, tantalum, and all the minerals that we've mentioned earlier, and really that making the DRC as a unique place. 85% of the world known coltan, where the niobium and the tantalum is coming from or is extracted, is in the DRC, and 70% of the world's known cobalt is in the DRC. The DRC has limitless water from the world's second largest river, which is well known as the Congo River. The mining sector in the DRC has been playing a significant role in the economy. And following the independence of the country, the mining sector was dominated by state-owned companies, mainly Drc in the southeast, Okimo in the northeast with gold, Miba in the center of the DRC with diamonds, and then Sominki in the eastern part of the DRC. And unfortunately, as we've seen, due to lack of investments and poor management, these companies started to decline during the 80s, and the DRC economy started also to suffer significantly. And the country really fell behind and fell into poverty, with 80% of the population earning less than $2 per day. If you can move to the next slide, Arsene. So the year 2000 has been really a turning point and the beginning of a new era for the mining sector in the DRC. The government started to work on important reforms of the sector with the support of the international financial institution, mainly the IMF and the World Bank, with the objective to ensure a growth and a development of the mining sector. In 2002, a new mining code was adopted and promulgated. The mining code was granting incentives to new investors, ensuring a limited influence from the DRC government and also the JCAMINs. In return, the DRC government also committed to ensure legal security of foreign investment. The country boasts some of the highest quality copper reserves, as we all know, with an average content grades of above 3%, which is significantly higher than the average grades that we know elsewhere in the world. So following this 2002 mining code, more than 20 JVs were progressively formed with either JCAMINs or the DRC government as the minority shareholders. It is true that this has boosted the production of copper and cobalt to some significant level, and DRC became the first producer of copper on the continent 5 years ago. And still then, the production continued to increase. I want to touch first on the challenges and the opportunities. If we can move to the next slide, Arsene, please. So one of the biggest challenges in the DRC is security. So the DRC mining sector presents a high risk and high return opportunity. The mining sector faced significant growth challenges due to political instability, conflict in the east of the country, which is a key mining region, as I mentioned earlier, where we did have at the time a Sominki, and now we do have a couple of entities struggling because of security issues. And also a severe lack of robust infrastructure and reliable electricity supply. So the 2002 mining code has shown its limitations. And in fact, despite the increased production level year after year, the expected growth of the economy, the expected reduction of poverty, development and infrastructures, and improved governance in the mining sector were not there. And this has led to an increased frustration and disappointment. The mining code was seen and perceived as granting all the benefits and advantages to the foreign investors. And unfortunately, this was the perception without necessarily assessing the role played by the government during the 10, 15 years of this mining code. So despite these challenges, the DRC's mining sector is expected to grow substantially on the back of the growing interest from mining companies from China, Australia, Canada, the UK, and the US, among others, due to the large untapped mineral reserves and proven low mining cost. Arsene, can we move to the next slide, please? All these have led to the revisitation of the mining code. 2 years after the first peaceful transfer of power, and now we can go to the next one. Yeah. 2 years after the first peaceful transfer of power since the independence of the country, the President Tshisekedi has managed to change the majority in parliament with a new coalition under his sole leadership. This is a significant change. A new prime minister has been appointed.
Yes, I'm just stepping in because I think we temporarily lost Mr. Bilambo. We'll maybe just wait a second for him to rejoin, because he was just on the point of the 2002 mining code, which was then further changed in 2018 to meet a good number of the unsatisfactory elements up to that time, and to have really a different dynamic in respect of the mining sector in the DRC.
Okay, yeah, it's working. If we can move to the next slide. yes, what I was just mentioning the disappointment of the previous mining code that has led to this new mining code, and this new mining code and the need to change the mining code was driven by a need to increase government's benefits from the expansion of its mining industry. So with the new mining code, the country's president is entitled to classify, declassify, or reclassify mineral substances as mines or as quarry products, or as an area prohibited for mining or quarrying activities. So the Ministry of Mine instead is responsible for granting, refusing, and canceling mining rights. And the mining registry is responsible for administrative proceedings concerning the application for and registration of mining rights, in addition to the withdrawal, cancellation, and expiry of these rights. The main changes of the new regulation are basically the increase of free stake of the government from 5% to 10%, the reduction of the stability clause from 10 years to 5 years, the increase of royalties from 2.5% to 3.5%, and for strategic minerals such as cobalt to 10%. And they've introduced a new tax on super profits of 50%. And something new that came up was the increase of the minimum export proceeds repatriation from 40% to 60%. And this has put a lot of pressure on the mining companies, as in addition to increasing the repatriations, the minimum to be repatriated, the funds repatriated could only be and can only be spent in the DRC. So they cannot service the debt or pay offshore suppliers with the funds that they're repatriating in country. And of course, the local content law came into force, and this has also opened the doors for a transfer of skills, but also a push for new entrepreneurs and local companies, I mean, majority owned by Congolese, to be part of the value chain of the mining sector, as mentioned earlier by Serge and Nawej as well. So in terms of the ownership of assets, there's an increased debate on assets ownership, and people are questioning the current partnership model with the majority of our joint ventures. Gécamines has introduced a new model recently with the Ziwa, where their stakes is significantly higher than any of the existing partnership. And the ownership of the processing plant will be transferred to Gécamines at the end of the agreed period of production. And this is a significant change. And this is basically what Serge was mentioning, the production sharing paradigm or model. But there's also a lot of noise around, the debt versus equity discussion. And as we all know, the majority of the joint ventures have significant level of debts. And as mentioned earlier, the profit of those joint ventures is not really seen and perceived as material from a DRC perspective. So some countries such as Botswana are considered as a model to explore. So it appears clearly that people want to see the impact of increased revenues generated by the mining sector in current environment, where we see exceptional high commodity prices. It is therefore important for the government to decide on the ideal partnership framework that will drive their future discussions with new investors. Improved governance and transparency will be key to ensure all the expectations are met in that regard. If we can move to the next slide. So what is the way forward? And the first point I wanted to mention is the importance of cobalt. As we know, cobalt is an essential mineral which is used for batteries in electric cars, computers, and cell phones. The demand for cobalt is increasing as more electric cars are sold. According to a recent projections by the World Economic Forum's Global Battery Alliance, the demand for cobalt for use in batteries will grow fourfold in 2030 as a result of this electric vehicle boom. More than 70% of the world's cobalt is produced in the DRC, as I mentioned earlier, and 15 to 30% of the Congolese cobalt is produced by artisanal and small-scale mining. ASM cannot simply be shut down. However, it is a lifeline for millions of Congolese who live in an extreme poverty. The increasing world demand for battery minerals presents a unique opportunity to develop a model for responsible artisanal mining of cobalt. The benefits from the cobalt model could apply to the estimated 40 million artisanal miners around the world that work on extracting different minerals for a living. Solutions need to be put in place before the electric vehicle boom really takes off. And the DRC, if we can move to the next one, Arsene? Arsene? Yes. Not? Okay, so now come back, yes. So it appears that the clean mobility and energy transition will only be truly sustainable if cobalt and other precious metals is sourced in socially and environmentally responsible ways. In the DRC case, this implies closer monitoring for both artisanal small-scale mining and large-scale professional mining. The DRC government has taken a step recently to better control ASM. The Entreprise Générale du Cobalt, EGC, was created a year ago to help control artisanal supplies and boost government revenue through price controls. EGC, a state-owned company with monopoly rights to the purchase and sale of the country's hand-mined cobalt, has officially begun its operations. They have signed a 5-year offtake agreement with trading house Tshitemb'uh for cobalt hydroxide. This is seen definitely as a right move to ensure better control of the ASM production and a responsible source of cobalt, and also a decent revenues to the artisanal, and ensuring a decent revenue to the artisanal miners. And the non-exclusive supply deal will also see Trafigura finance the creation of strictly controlled artisanal mining zones, buying centers, and logistics to trace supply. If we can move to the next one. And in conclusion, what we can say is that DRC has come a long way, and it is the right time for the government to decide on the strategy of the mining sector for the next 10 to 20 years. Couples of recent initiatives are addressing the needs for the DRC government to benefit from its mining sector, such as the new mining code, the local content law, the creation of JEC for responsible sourced cobalt. Results will be significant and sustainable if the DRC government also improves the governance of the mining sector resources, and this will help consolidate the development of the sector and open doors for further investments and better partnership with Congolese entities. At the moment, DRC is only exporting cobalt hydroxide, which is only a semi-final product. It will become more and more relevant for the DRC to look at opportunities to partner with investors in order to build cobalt refineries in the DRC and hence add value in country for this product. This will open the door for manufacturing the batteries in the DRC and further develop the country. Next one, and I think the final one as I'm landing. So the debate, in conclusion, the debate related to the ownership of mines is something to encourage. The DRC government can explore what has been done in countries such as Botswana and maybe open the doors for JV to be listed abroad and raise funds through stock exchange directly. Some voices are raised to consider creating a stock exchange in the country. This seems to be premature for me. The sector needs to consolidate further with proven results before exploring this opportunity. There is a need for enhanced stability and governance before reaching this level. The new government of the DRC under the new leadership has been sending good signals over the past months and is showing a real desire and commitment to achieve this. This is well perceived, and we can only encourage the government as we believe this is the right move. I will stop here, and I hope that I've covered some of the points that we wanted to cover. And I'm sure with the Q&A session, we will be in a position to answer some of the questions that have been raised. Thank you very much for listening. Thank you.
Thank you very much, Serge Bilambo, for this clarifying presentation. Thanks a lot. And thanks also for holding on and coming back to us with the brief interruption. So no, I think it was very interesting. In the meantime, I think we are at 8:12. So if we still want to address some questions, I think which have been coming in. And I've been looking at the questions also a bit in the meantime. I can maybe deduct something from the different questions, maybe instead of just addressing one of them is, I see a bit of feeling with the audience that they say, okay, it's fine, you have the production sharing, you have increased participation of the government in mines, it's all important and it's a unique opportunity. And I think it links to what the final part that Serge Bilambo said, like, is it really not the best way to include more of the value chain, like the treatment, the refining, the manufacturing into the DRC, into the African countries to take a larger part of the whole value chain? I think cobalt is around 55,000 per ton on the world markets, I think a couple of weeks ago. I don't know what the exact price is now, but just take it a very simplistic way of thinking. If you take the value of 5 or 10,000 out of this 55,000 and the rest is realized in the value chain outside Africa, is it then not really the most interesting, even compared to production sharing and increased participation, to move a much larger part of that value chain into Africa? And I think it's even a question for both Serge, but maybe I'll give the words first to Serge Nawej.
It's really interesting. I would have loved to have the banker's view before I'm giving mine, but no problem. Thank you, Yves. Thank you. I'll try to address this question. It's really difficult now to say if it's more interesting or not. The issue is the market and what the markets wants to do now. In terms of market now, is that the markets there's a real demand, and then we need to be able to create, I'll say, the know-how and then transfer. So I do believe that both systems can cohabitate, and that's where we will be going. We can't yet manufacture anything into Africa because we need, especially in a country like Congo, we need infrastructures. I was talking about electricity. For instance, we're leading one of 500 megawatts project in solar. And we've been encountering a number of issues which are delaying the project, but eventually will come out and ensure that actually we complete this project. But just so to say, there's so many problems now in terms of infrastructure that we can't address in the short term. So in the short and middle term, I don't believe that actually Africa will be in position now to start manufacturing and then beneficiation, the proper beneficiation of all these how do you say that these cobalt and copper and then the minerals resources. But there's one thing which will actually lead Africa to get there. It's because if we look at even the population, no matter what we think about the population control, Africa and then countries like Congo will have a deep population, although we know that actually in all documents will say that it's only $2 per person and per day, whatever they're spending. And then this, but I do believe that the demand, and then if you look at a country like Congo, is changing, is evolving. And we have not yet found the right data to quantify how people are definitely living and then how being, and then we just say that they are resilient. But in fact, the demand is going. It's a cash economy. These are economies will definitely start consuming also the product they're already doing when it comes to telcos. I don't know the rate of penetration. It's still low, but the more we go, the more it's going to be over. So Congolese themselves will start actually also using their own minerals for their own needs. That's where they'll start manufacturing. But the first step for me would first be to empower a number of Congolese, a number of entities, and the best way and the easier way to do that is through production sharing. There will be adjustment down the line. At least this is my opinion.
Mm-hmm. Okay, no, thank you lots, Serge Nawej. Serge Bilambo, do you want to share your view on this? So if we can bend more with value, yeah, go ahead.
If you don't mind, if you can just repeat the question. I think I missed a bit.
Yes.
With my connection.
Okay. The question is it possible, okay, even if it's in the short term or longer term, to include more of the value chain of the minerals, which are now mainly exported still in a relatively raw shape, into the African countries and the DRC, so that more of the processing, the treatment, the refining, and so of the value chain is remaining within the country and creating a basis for industrialization?
Yeah, I definitely think that this is possible, if and I think this local content law, maybe Serge Nawej may add something on this, but there is a provision which is requiring the mining companies to put a 30% guarantee as a fund to allow the local companies and the value chain to have sufficient funds to start a servicing. So what is key to me, and I think, yes, the production sharing is one thing, but again, before you can reach to that level with such a significant amount of capital to be part of a partnership, it takes some time. For sure, what I would push definitely is for banks to partner with the regulatory body of the local content law and see how we can support as much as we can the subcontractors and the value chain of the mining sector to ensure that they're getting the right skills and they start also performing and delivering. By entering into this value chain, but by starting to be part of the process and the production, we will definitely see a development somehow and see more and more local companies being part of the value chain, growing, expanding, and maybe why not also starting to explore opportunities directly into the mining sector.
Mm-hmm. Yeah. Okay, no, indeed. Thanks a lot. We'll see for another question I think that we had. If I recall well, there was also a question like, well, do we have to be attentive to the point of the environmental impact? Because of course we talk about batteries, green energy, but also just the refining and the production manufacturing is polluting, of course, in a certain way, which is happening in China with coal-fired plants, electricity. So could it be that finally the refining and the value chain moves to Africa, but also a lot of the issues related to the production of the cobalt and the products, lithium, that you need for the batteries? I will maybe follow the same order, Serge, Nawej.
Well, I think there are a few things which are really important. Anything can happen. I'm sorry, I think my son is having a little bit of noise, so I had to change the place. But anyway, hopefully it won't disturb too much recording and everything. But what I was just mentioning here is that I personally think that we need to be very cautious about it, because there are geopolitics positioning for many countries, including China. There's all these issues that you mentioned about environmental issues that we can suffer, and then that can definitely affect the production in social, etc. can affect all these issues. And we definitely need to understand that there's how do I say that? We need to be, again, cautious about this, the way that the word is working, and then the way that is going. Now I agree with Serge Bilambo when he's saying that the local content and the number of changes have brought Africa and then countries like Congo to a better position when it comes to foresee possibilities of having the value chain brought back in the Congo, and then the role of the bank. But when it comes again to changing the way that the system is working, it will take time, because it means that actually China will have to change also its own approach. It means that actually we'll have to have a leapfrog in terms of technology to be able to address the environmental issues, and this will not come overnight. So I definitely do believe that the first step for Africa will be to step into the system, and not just being a place where people are taking minerals, beneficiating that, and then they bring back products with value addition, high level value addition, like phones, like etc. And then they just sell back to Africa at 10 times the cost, the real cost. So I'm not sure that, and as an African, it's paining me to say that, but I'm not sure that actually we are ready now to be able to be producing that. It will happen. And then when you see China and the leapfrog that China made while we were discussing about China, and then technology, an advanced country, and now China is probably one of the most advanced technological country and developed, the second largest economy, probably even the first one. And this happened only I would say in less than 50 years. So I see that happening for Africa, but I believe that unfortunately, I will not be alive to see that happening. Yeah.
Yeah. Okay, thanks a lot, Serge Nawej. I will have another question for Serge Bilambo. I see already some hands raising, but maybe let's see, because I think it was also addressed in Serge Nawej's presentation. For everything, of course, project and realization of projects, also in the supply chain, you need funds, you need financing, you need money. Without money, there's no really a project. And I see also amongst the questions, would the be a possibility to create a stock exchange for minerals in Africa, and maybe use that as a basis to raise funds? This is for Serge Bilambo.
Yeah, thank you, Yves. Yes, project financing has always been, especially in an environment where, like the DRC, and when we're talking about a greenfield project starting from the beginning, it's always difficult, even for a bank, and even in other countries in Africa, to step in at certain phases of the project. We, as a bank, it's always difficult to step in when the project is in an exploration phase. More likely, we can step in and jump in when the project gets to the construction phase. So after the feasibility study is approved and all those things are approved, so we're more certain that the project will go along. But it's something critical, and the majority of the projects in the DRC, as you can imagine, they raise the funds offshore and not directly in country. But for limited scale project, this is definitely something that we should be discussing and considering, depending on the type of guarantees and securities that we will be able to receive. So it's definitely something very difficult for a bank in the DRC, taking into account the environment and the situation.
Mm-hmm. Okay, yeah, thanks a lot. I think I'm conscious of time and also the precious time of people in the evening. I still see a lot of questions and hands raised. I think it would be good that we can move to the networking. Yeah,
so
maybe just Julia, just one second.
Yeah.
I really want to thank a lot for the precious and the very interesting insights from the two speakers, from Serge Nawej and from Serge Bilambo. We are throwing flowers to you. You will see them virtually, but thanks a lot for this interesting evening.